I'm gonna go through this step by step. It played out exactly as how I had labeled it, and I'm gonna be using this model for you guys going forward, especially for you young traders. This is forex trading in motion, in action. You see, traders, as I've often mentioned, you need to know where the stop losses are. If you as a forex trader cannot identify where the current traders are present in the market, you are going to become the liquidity, which means your stop loss is going to be touched. Liquidity in the market is money. You have the market maker liquidity that they pump into the market that use to control the market. You have the investors liquidity, that's the big hedge funds and so on. And then there's you, the forex trader who deposits 5,000, 1,500, any amount. And your job is to see to it that you grab liquidity from the market while maintaining a low loss factor, or you're just seeing to it that you're not losing more than 3% of your total account balance on any given day. So, with that being said, and in the interest of time, because I have several videos I want to drop for you guys today, let's get into the matter. So, you already saw the earlier video. I posted a link to this so you can see the follow-up. So, this is technically part 2 to this. Now, look at this, guys. Look at this. This is just so beautifully outlined, and I like what I'm seeing. I'm gonna try to sectionalize this into some zones. So I'm gonna first start off with right here. I need to sectionalize this with some zones. So I want to start. All right, I'm gonna go on the inside bar because this was where the first fake out took place, and I'm on the H1 chart, by the way. And I'm going to also highlight right around here where this was the running of the stops. And oh, I got a highlight right here. So I got a lot to do in this video where the market clearly gave us an indication. So guys, screenshot this, save this video, play it over, show it to your friends, share up this video, because this is where the overall knowledge is gonna be shared and passed out. And as I said, go in the comment section, let me know. So we saw the overall bearish trend range, right? We saw the massive sell-off that took place. Now, understand, I might have to move this. I want you guys to get this. So I'm going to still keep the neutral zone. Now, understand, you see this candle right here. Let me zoom in for you guys. This candle is very important. This area had to be filled at some point, right? And this is a subsequent move. Now, this happened so quickly because as you can see from this box, run stops of early swing buyers. Who are those early swing buyers? The guys that got in over here at the start of the week, right? Many of them got in, sadly, many persons got in on their buys up here, so, but they got neutralized on this move, right? So once the market maker saw that persons, upon jumping in on this move, I'm gonna have to really go microscopic with you guys on this one. So I'm gonna have to go on the M15 chart now. Yeah, 15 minutes. So I'm gonna have to go microscopic. I want you guys to see all of this step by step. We want to play this out properly. All right. Now, once we saw that the market price came, I'm gonna fix this up a little bit. Fix this up a little bit. All right, here we go. Once we saw the market price make this move, we didn't see the earlier zone being taken out. So this was a clear bullish rejection. And the price came, tanked, wiped out everybody that was on this move. Everybody that was on this move, them gone. They got taken out of the market. But look what happened after. This is the part that messes up a lot of forex traders. The market price, I'm going to barely take you out of the way for a quick second. The market price took out the previous low right around here. So this one, trend line, these guys gone. These guys got taken out, right? But in the wake, we saw a massive recovery. Now, notice now, he didn't just shoot the price up. Notice how late in the game the price re-entered into the neutral zone. But as I was showing on the H1 chart, I want to point out why this area had to be filled. Now, this gave us a liquidity range. Why is it a liquidity range? Right here, so, was a neutral zone, clear manipulation. A lot of traders got trapped in here. Those who bought right here, so sadly at the top, their stop losses, they got ran because their stop losses would be down here. So they got taken out of the market. So I'm gonna put one line here and I'm gonna put one line right here. So this entire zone, one big arrow. This entire zone, all of right here, so that area typically it had to be filled. How it had to be filled? It had to be filled with candlestick bodies. Get me? Now, most of the time, we're accustomed to thinking that the market can just shoot off. No, there has to be an accumulation. This is why I said this video is so important. There has to be an accumulation because many traders who got taken out of this move, fresh new buyers are entering the market. Now, why would fresh buyers enter the market? Listen, all of the previous top zones, they were still intact. Let me quickly go back to the... Why I keep pressing that button? Let me quickly go back to the H1 chart. I did it again. One. Let me quickly go back to the H1 chart and really point this out. Look, guys. Everybody, even though these guys at the start of the week, and this is from last week, got taken out. This is the new week that we're in. Today is Tuesday. The market price. All right, let me get the start of today. Let's get the 22nd, right? I really want to base and by the way, I'm gonna do a video showing you guys how I break down week by week factors, showing the expansion process of the market versus the overall constricted movement. You have to see it. If you don't see it, you're putting yourself in a lot of trouble. So this is Sunday. I guess I could start from the Sunday, but I'm gonna start all right, I'm gonna start from the Sunday, right around here, 6 p.m. Now this move. So all right, I guess I need to get Friday because Friday was really got a lot of work to do. I'm doing a lot for you guys on this one. So let me catch this. So Friday of last week would have been the 19th. So it was from the 19th the market price started the recovery, right? So let's get your 19th right around here. Now the market resets at 12 noon. So Thursday was when the market cycle came to an end. I, mentioned that in the earlier video. All right, back to the M15 chart now. Why do I keep doing this? 15, just type out the number there. All right. Back now. So we have our zones then. We have our zones, and this is very important. Once you understand how market price expand out of an era from a typical zone has been respected, and you match out the highs and lows of that area, especially the vital liquidity zones, you start to create what we call a template from which to act from. Now, the time formula dictates those certain rules. The rules are open market, which includes the opening hour candle. You can mark out those zones to assist you. I'm going to do a video on that as well. The 12 o'clock reset, the London market open, and the three impulse times of the US market session, which are 8 o'clock, 10, and 11:30. All right, those are the three crucial times you can catch some substantial moves. I have to do a separate video for that as well. So bear with me. So what do we have here? So this is around 12 a.m., 19th of September. All right, Friday. So we saw how the move, sorry, Thursday. We saw how the move played out. No, it was wrong. It was Friday, yeah. We saw how the move played out. Market price get going. Now, where did Friday end? The low of Friday. We have to highlight that. Always mark the lowest area the market price made overall for the week, but also it's important to mark the lowest area the asset price made on the closing, the lowest area for the week, and also on the closing day of the week, which would be Friday. These are some crucial pieces of evidence that can assist you. Now, look at this, guys. What is this telling us? Now, this is Thursday, right? Friday. Remember the cycle ended now. The market momentum was showing us a clear build up, and look how the price took off. Look how the price took off. And here we have it right about now. Let's go now to the 22nd. So this is Sunday. Let's mark Monday now. And this is where trading can become dangerous if you don't know what you're doing. I mean, let's mark it right here, 12. Cool. Look what happened right around here. Market makers like, I gotta mess with some of you guys. But had you had gotten in from earlier Friday, you're on your way. We went up into the neutral zone, broke past it because we already had gathered the momentum that we needed. Remember, from this low was respected. From 3627, nothing. Even though we saw market price run some stops, every single stop loss along this era would be safe. Price get going. We got a full, complete, all of this zone, top to bottom, right here, so there's a brush. All of this zone, top to bottom, got filled out. And the crown era, the era that we couldn't pass earlier, market price just kept on building momentum, building momentum, building momentum, then took off. Slight retracement took off. Accumulation then took off. Always note the areas where market price is leaving. Once you see there is a respect of that zone. That's one of the key levels you can watch. They're probably saying, but what if I place my stop loss here, then the price, stops me out again? First of all, you cannot look at the first wave. This is what is messing up a lot of you traders. You're looking at the first wave of the market move, and that is what is overall throwing you guys off. The first wave usually is the one that the market maker is going to take out traders. Right here, so let me go back to the arrow. Right here, so is a clear example of that being shown. We saw the market price shoot up, come down, come back again, shoot up, run stops. See, right here, so stops were ran, then it shoot off again. But notice everything, 1, 2, then right here, so 3, was significantly higher. Price was just filling this entire zone and leaving the area. It's not all the time market price is gonna make a strong counter move, then shoot back up. No. Many of the times you're gonna see a counter move and then price takes its mere little time moving sideways because that's where the money is being put in. So all of this movement that we saw right here, so was capital being injected in the market to subsequently move off the price to where it needed to be. That's the beauty of Forex right around. I mean, the formula is just laid bare for all of us. I mean, I can't draw back all of that. As I said, I'm going to be doing more models with this later on. It's so it's so wonderful once you have a trading plan and that trading plan actually pays off. So flash out to the current market area. And many people would say, okay, that's the past. What do you do with current market area? It's simple. You go right back to your roots, your basics. The market price is at a new high. History is going to repeat itself, people. Mark that high. This is the new high. So if price of gold is going to reach 4,000, which I've already called, mark the zone where the market price broke out of, right? So this is my breakout zone, all of right here. So today is just Tuesday. The market price is in perfect alignment right now for me to get a little bit of a pullback before there's a continuation of the move. So, same thing, 100, 100, 50, 0. I'm keeping this as simple as possible. I understand that up here, buy zone continuation, neutral zone, and if my neutral zone is not maintained, If he decides that he wants to run more stops, which he can do what he wants, he's a market maker. If he decides to run more stops, then essentially speaking, he can. I just have to get confirmation if the market price is going to do the latter or the former. I cannot jump up and say the market has to do this. The market makers are the one that run the market. I understand that those who bought up here, their stop losses are here. Okay? That means, sorry, those who sell here, their take profit is down here, their stop losses are up here. So the market maker can then spike the price, trap more buyers, and then come back down to the neutral area. Simple as that. It's in the neutral zone. We're looking for more accumulation to take place. That is going to give us some momentum because all of this is a strong range. So we're inside what we call a potential exhaustion point. Just how far the market maker is going to take this in terms of overall stop ons up to what we see in terms of market move. So he can decide that, all right, I'm going to send the price all the way down to here like what he did earlier on my previous markup, or he can go into this area, do some little bit of neutral movement, and then take off the price. It's really up to him. It's really up to him. So, with that being said, I still mark out this zone. And for this current week, I'm going to fix this like a little better here. Because I understand what this means. I'm going to refine this later on for my own personal use. Let's see just how far he's going to go with this. All right. That's the first one. Second one coming up.